From Asia to Europe, all the way to gold, there's a lot to talk about, so let's dive in. Number one, economic and stock market risks. We've talked a lot about inflation here in the US, but we've also talked about different elements of growth happening in Asia. Now, China came out and reported just the opposite of what we were expecting as well. Now then you take a look at Europe and the different dynamics that's going on and the ways they're having some elections in France and some of the parliament with respect to not only in the UK, but then the European Union in general, and that's also different than what we were anticipating. Well, then you start to take a look at gold and other the inflation kind of beneficiaries that are all of a sudden stop going up, and you're starting to question and say, why is this happening? Well, for one element, there are a lot of different dynamics that are going on and some of the risks, which is one of the reasons why we have a diversified portfolio. But when we see Asia, we see Europe, and we see the US, all different countries, all different areas in the world, and all different growth elements go down at the same time, well, that's when you start to actually realize that it's not a specific environment where the entire world is going into a recession, but it's just a pocketed events that were starting to occur and ones that we need patience for. So when we take a look at Europe, it's growing at a faster rate now than what they were a year ago, and they're coming out of this industrial and manufacturing recession, which means their growth rate is accelerating. So what we're seeing is just snap judgments that are happening in the markets. Then you take a look at Asia, you take a look at China, and while it may be that they're starting to slow down in the very short term, long-term growth actually has them really starting to pick back up. So it's just temporary items as well. Inflation then in the US is something we have really been, well, obviously having to deal with, and how we relate to the stock market and the bond market. And if all of these things really are coming to fruition the way that we're starting to see more and more, then you can start to see that everything that happens, whether it's for gold going down, was just a systematic play. We're starting to see China starting to slow the purchases of gold. All that is more just to say that that was just a temporary event. But when we actually start to see shifts happening in the economies, which we are not doing right now, we're not seeing a shift to become worse, we're actually seeing a shift to become better with many economies, and the seasonality of where we're at in the election cycle, where we're at with the stock market and the growth potential for the months and the rest of this year. Well, now you can start to understand that things do happen, sell-offs in the markets do happen, but it's how we relate to them, it's what we think about them, and it's the ways that they're selling off to either cause the question to step back or to continue to be invested. And right now, all roads point to just this being a very temporary anomaly and the need to keep patience, and that there may be great opportunities to come. Number two, portfolio changes. As we look to the portfolios, realistically speaking, like I mentioned, there's been a lot of just different things that have been happening in dynamics. And I've talked about this before, where we're looking actually to decrease the amount of positions, but that doesn't mean that we're looking to decrease the amount of growth. We're actually seeing that there's going to be significant amount of growth in economies, which could translate to the stock markets around the world. And if that happens, there actually could be reasons to believe that different stock markets around the world actually may be doing better than the US. So there's a lot of reasons to suggest that the European markets, even though they're down for the last couple of days, may be temporary. And there's also a lot of reasons to suggest that technology in Asia, that companies in the US are all going to do just fine. And when we take a look at that, coupled with another type of inflation beneficiary, utilities, there are a lot of good ways that we can be looking to diversify and grow the accounts. Now, when it comes to that, there are no changes that we have been recommending for this week, but mostly it's just a continuation of what we've been seeing. Number three, wealth management, and advanced planning. Summertime brings us into a really good element when it comes to some overall wealth planning. Now, what I mean by this is that it's a good time to reflect on where you're currently at with respect to insurances. And one of the insurances that generally gets overlooked is your homeowner policy, and could be your other policies with respect to auto and umbrella policies. Now, why I mention this is because of the fact that when we're starting to see inflation creep up more and more, and one of the biggest beneficiaries of inflation are real assets, tangible assets, houses. What we can see then is that there's a lot of reasons to believe that your valuation still may be increasing. And if that's the case, then making sure that your homeowner's policy covers all of that. So have a review of your homeowner's policy to make sure that you have enough coverage and it's covering your not only possessions, but also replacement of your house if needed. But then also consider another element with respect to the umbrella policies, because they can be additional coverage, not only for your home, but also for autos, for your boats, for even others like aircraft and whatnot. So this is a really good time to have a review and a stress test of your overall policies to make sure that they are appropriate and are the correct amounts for your needs. Number 4, our second opinion service. As a reminder, whether you or someone you care about wants to have a second opinion, or what we call a stress test of your overall wealth plan, now is the opportunity and the time to do that. What we do is we go through and actually figure out where you're at today, where you want to go in the future, and then put together a roadmap or a path to get there. Now, there may be some gaps in that path. So in this case, you could think of them as either a speed bump or could even be a pothole. But what we want to do is take a look at those potholes and figure out how to fill them, fill those gaps that may exist. And this is where we can come in to help to put together the plan and the path forward. And the goal is that we can be putting you on a better path in the future. But it all starts with a discovery meeting. And with that, if you would like to have a discovery meeting and really go through to see if there are opportunities to help improve your overall wealth plan, please click the link below and we'd be happy to schedule time. So with that, we're glad that you're here and we can't wait to talk with you. Take care.